Wall Street is the most powerful financial system on the planet. It is a place where fortunes are made, erased, and all controlled by a small group of powerful business elites. Their success is built on math, strategy, and a deep understanding of how money really moves through the world's largest organizations. Who are these people, and how do their daily decisions control what goes in and comes out? Join us as we explore the mathematicians, traders, and founders that crack the system and quietly shape how Wall Street operates. At number 1 is the untouchable billionaire who changed everything. Number 5, Kevin Cohee, the man who saved African-American banking. We start off our list with the man who both started and struggled with nothing, but studied his way to Harvard and grew his assets into a $700 million empire. Born in Kansas City, Missouri in 1957, Kevin Cohee was off to a rough start from the very get-go. His mother passed away when he was little and he had to be raised by an uncle. Cohee's early life was marked by intense loss and hardship, yet it was the start of one of the most remarkable financial success stories in American history. Now, this is where his story gets interesting. Kevin Cohee put himself through the University of Wisconsin, where he got good enough to play varsity football for 4 years while earning his degree. Then he went back and earned his MBA before walking into Harvard Law School and graduating in 1985. After that, he went straight to work as an investment banker at Salomon Brothers. It was one of the most powerful banks in Wall Street at the time. 2 years later, he bought a company called Military Professional Services. This firm was responsible for marketing Visa and MasterCard services to soldiers through a leveraged buyout. As the business grew, its total net revenue grew by over $40 million and over 20,000 customers from the military. But this was just the beginning. He wasn't chasing Wall Street money, but something bigger. Most African-American families and businesses in the 70s and 80s still struggled to get loans and open accounts like every other person due to social segregation. He wanted to fix this by building a world-class bank that would give all the financial services mostly denied to his people at the time. But to do that, he needed to start small. So in 1995, he and his wife Terry bought a majority of the Boston Bank of Commerce for $1 million. For saving the sinking ship, Cohee was named chairman and CEO in 1996 and immediately got to work. He went on to buy the People's National Bank of Commerce in 1999 before buying Founders National Bank in a stock swap of $10 million in 2001. What followed was Family Savings Bank shortly after for $12 million, and in 1996, he unified all 4 banks under one name, One United Bank. And just like that, America's largest black-owned bank was born. From 1997 up until today, One United's assets grew by over 11 times from $56 million to $650 million. One United won the U.S. Department of Treasury's Enterprise Award for Community Development over 10 times. It was the highest award given by the U.S. government for serving local communities long ignored by traditional banks. Then in 2016, at the peak of nationwide protests against police brutality, Cohee created and led a movement that moved tens of millions of dollars to African-American banks in economic protest. It was a move that quickly caught the attention of the U.S. government, making the bank to be named Best in Business by Inc. magazine later on in 2024. And if you think that's impressive, we're just getting started. Number 4. Ime Archibong, the unknown meta visionary. We now continue with the widely unknown person whose unique ideas grew Mark Zuckerberg's Meta from the industry's laughingstock into a trillion-dollar empire despite the company's many struggles and failed promises. Born as the son of Nigerian immigrants and now holding over a dozen patents tied directly to Meta's biggest profits, meet Ime Archibong. Raised in North Carolina with many talents up his sleeve, he captained the varsity basketball team at Yale while double majoring in electrical engineering and computer science at 18. And as we'll see, this was only the beginning, as right after, he got his MBA at Stanford where he served as class president before going off to join Meta in November 2010. But it was within his first year at the company that something remarkable began to take shape. Archibong's rare ability to see both the technical and business side of every decision made him stand out immediately. And for the next decade, Archibong would be the man working directly with Mark Zuckerberg. He was the person called first when urgent ideas were needed for all major projects at the company. Almost every profitable partnership and platform decision made at Facebook ran through him, so it wasn't long before Zuckerberg promoted him to vice president of product partnerships. His first target at the company was the developer ecosystem, where he became Zuckerberg's point man for any company that wanted to use Facebook. Thanks to his strategic choices, these companies and their integrations became the financial backbone of the platform, accounting for over 98% of the platform's revenue. He led several of Facebook's major media-related partnerships, including holding talks with the biggest names in the entertainment industry on special permissions to use their music for the platform. Thanks to this idea, leading content creators on Facebook were able to use copyrighted music for free, almost a decade before that became the controlled norm on today's Instagram Reels and YouTube Shorts. Somehow, he figured a way for artists and record labels to earn more by allowing creators to use their music while increasing Facebook's ad and music revenue. Thanks to Archibong's strategy, total profits for Meta increased from $4 billion in 2012 to over $70 billion in 2019. But it doesn't stop there. Under his leadership, Facebook Messenger was transformed from a basic chat feature into a full commercial platform built to compete against the far more successful WhatsApp. As the head of that division, he engineered Messenger's expansion, growing it from a few hundred curious beta testers to over 1 billion active users. Archibong's idea was simple. Messenger has billions of people using it, so advertisers would pay millions to give a glimpse of new products, bringing in even more revenue to Zuckerberg's company. When the Cambridge Analytica scandal broke back in 2018, threatening to collapse Facebook's entire developer trust model and billions in platform-dependent revenue, he was the one Zuckerberg called to stabilize the relationship between the platform and thousands of third-party developers. He protected the company from what analysts estimated could have been well over $5 billion in lost revenue. These exploits soon caught the attention of Capital One, one of the 10 largest banks in the United States, managing hundreds of billions in assets and tens of millions of customer accounts. Recognizing the value of his judgment on technology and financial infrastructure, the bank brought him onto its board of directors in March 2021 to help shape its biggest strategic decisions. Today, he holds more than a dozen technical patents related to Meta's core infrastructure. Though his name isn't widely known or recognized as the man who shaped Zuckerberg's empire for almost a decade, the depth of his influence and the scale of what he helped build tell the full story. Yet, all that doesn't come close to what we're about to show you. Number 3. Russell Goings Jr., the man who proved everyone wrong. We move on to the person unable to read and write at 12 years old but would rise later on to earn a seat at the New York Stock Exchange. Meet Russell Goings Jr. Born during the Great Depression in Stamford, Connecticut, Goings' parents had moved north from South Carolina looking for a better life. Both parents survived on welfare and coal scraps while their son was at school. Life there was not easy either, as all teachers thought he was slow and wanted to put him in reform school. By today's medical standards, it's confirmed that Russell struggled with dyslexia, but it wasn't well known back then, so reading felt impossible, and spelling seemed like a drag. Not wanting to give up, he decided to build long reading skills by using the media he loved the most: short films and comic books. Many saw this as unusual and unfruitful for someone like him, but thanks to those, he learned to talk and read more fluently and surprised everyone by earning his bachelor's degree in 1959 from Xavier University in Cincinnati. But the real surprise was yet to come. Realizing his natural talent for sports, Goings went up the ranks in professional football. First in the Canadian Football League and with the Buffalo Bills in the American Football League. He played as linebacker most of the time until an injury ended his football career. Thankfully, he had a job as a stockbroker at J.W. Kaufman & Company in New York. Now this is where his story gets interesting. It was 1963 at the time, and Wall Street was almost void of African-American workers and clients. Most companies weren't interested in hiring people they considered as foreigners, but Goings liked at that gap and identified a huge business opportunities. How he planned on pulling this off was simple. As an African-American stockbroker, he could open a medium for investing for people like him. From wealthy black athletes to entertainers who had lots of money to put in, but no one at Wall Street was ready to help them. With a clear vision in mind, Goings walked into hotels where visiting sports teams and jazz musicians spent the night. There he made real friendships, and those friendships became clients and partners that would work with him for decades to come. By 1969, the entire NBA's Players Association brought him in as the official financial advisor for the whole league. It was a whole different day, and his employers at Shearson Hamel quickly took notice and made him the first African-American branch manager for a New York Stock Exchange member company. He single-handedly built that branch into the top-performing office in the entire group. But Goings was far from over. He wasn't going to run somebody else's company. He was going to own it. So in 1971, he bought his branch of Shearson Hamel and renamed it to First Harlem Securities. With that settled, he spent $250,000 to buy a seat on the New York Stock Exchange, a transaction costing almost $2 million in today's money. This was a huge gamble on many levels, but it paid off when General Motors signed a contract with Goings Group to buy stocks for its pension fund. With the biggest firm in America choosing his company to take care of its workers' retirement, Goings became the first African-American owner of a firm managing assets for Fortune 500 companies. And to top it all off, he was later inducted into the Wall Street Hall of Fame and became the first black chairman of Harlem's Studio Museum. He passed away on August 3, 2025, standing as a true icon whose footprints on Wall Street will never be erased. Number 2. Troy Dixon. The Wall Street mortgage tycoon. Born and raised in the Hollis Park neighborhood of Queens, New York, Troy Dixon earned his economics degree from the College of the Holy Cross in Massachusetts in 1993. And just a few years later, he came up on Wall Street as one of the most powerful businessmen in the mortgage industry. That is where the preamble ends, because what Dixon did next was nothing short of breathtaking. He started his career mining through investment banks, working and learning the security markets backed by home loans. What he learned was simple. Whoever controls the trading of these products controls enormous amounts of money flowing through the global economy every single day. Rising through the ranks, he soon became the head of managing the flow of mortgage payments from millions of homeowners directly to investors at Credit Suisse and then at UBS. This was important for multiple reasons. First, these were two of the largest banks in the world, and the volume of money moving through a desk like that was staggering. Secondly, Dixon pulled it off, and he did it so well that one of the biggest banks on the planet came calling. Dixon's new job was co-heading the structured product trading group at Deutsche Bank in New York. As managing director and head of agency RMBS trading, he was the man deciding how billions of dollars worth of mortgage investments got sold, bought, and protected from risk every business day. And that wasn't all. Soon after, he was brought up as the newest member of the bank's executive committee. Now he was sitting in rooms that decided the entire direction of the bank's American businesses. With this level of power, the industry quickly took notice. Black Enterprise magazine placed him on its 75 Most Powerful Blacks on Wall Street list in 2011 and its America's Most Powerful Players Under 40 in 2007. Investment Dealer's Digest named him one of its top 40 under 40 in 2006. These were huge achievements, but Dixon was just getting started. In 2013, he pulled off something only the craziest people in finance would barely think of doing. He walked away from the job that brought him so much success and decided to start his own company. While, of course, he wasn't the first person in the world to leave a stable job to chase a passion, but a job at that level generated the kind of wealth most successful businesses on our list could never afford to provide. The new company was Hollis Park Partners, an alternative asset manager named after the neighborhood where he grew up. Things seemed to go slow at the start, but in December 2014, less than 2 years after opening, Hollis Park was signed in a partnership with GCM Grosvenor, a $50 billion giant that provided $50 million to his company in seed capital. Dixon grew that number to over $225 million by 2015, before donating $250,000 of his profit share to College of the Holy Cross, the school he enrolled as a child. A decade passed before TradeWeb Markets, an e-trading platform with $2.4 trillion in daily volume, named Dixon co-head of global markets in 2025. Troy Dixon started as a mortgage banker learning the numbers from a small office, and today manages more money in a single day than most countries produce in an entire year. Yet he is not the top person on our list. Number 1. David L. Steward, the world's richest Black American. What we are about to show you is a story he told about his past that gives us a deep glimpse of how he started. He grew up in a society marked by segregation, was raised in a house with no running water, borrowed from his father, and from there built the largest Black-owned company in American history. Meet David Steward. He is perhaps the richest African American alive, yet he rarely appears in the news, and his success is built on the math of logistics and supply chain technology for the world's largest organizations. Born in Chicago in 1951, Steward's family moved to Clinton, Missouri when he was still young, a small town of about 10,000 people. In that place, life was simple, hard, and deeply segregated. Thanks to racial segregation, David's father could not get hired at the local power company because of the color of his skin, and so he bought a few acres of land, raised livestock, and worked odd jobs to feed his family. This was a near impossible task, as there were at least 8 children in that house. Chores started before sunrise and ended after dark. But Stewart would later say his father was the first entrepreneur he ever knew. He was a man who refused welfare, yet somehow figured it out anyway. Stewart worked hard and graduated from Central Missouri State University in 1973 with a business degree, then became the first Black person hired by Missouri Pacific Railroad to sell rail services. From there, he moved to FedEx as a senior salesman and account executive. Just 11 months later, was recognized as Salesman of the Year and inducted into the company's Sales Hall of Fame in 1981. To honor this moment at a FedEx awards ceremony, he thought they would give him something iconic, something he could confidently put on a shelf or hang on a wall as a reminder of what he's capable of. Instead of that, what he got was a silver ice bucket with his initials engraved on it as a reward for all his hard work. He looked inside and it was empty. All that talent, all that hustle, and all those results, yet the reward was a hollow silver ice bucket. As a man who knew the selling points and actual worth of company assets, he knew how much money his hard work had made for the company. Yet this was all he got in return. He got home and stayed awake all night thinking about what just happened and decided something needed to change. With a mapped-out vision in his mind, he approached his father with a promising business pitch and borrowed $2,000. And with that money, he launched Transportation Business Specialists, an auditing firm that reviewed freight bills and overcharges for the railroad industry. That $2,000 startup would grow to become the largest Black-owned company in American history without venture capital at the start. His second company, Transport Administrative Services, was hired by Union Pacific Railroad in 1987 to manage millions of everyday transport fares, reaching nearly $15 billion worth of rate information. At that time, he noticed Union Pacific Railroad had very limited revenue because they lacked the latest and most efficient technologies on the market. And from that observation came an idea that would make him the richest Black American in the world. The plan was simple: help smaller businesses get the technology they needed at a faster and much cheaper rate than anyone else. And to pull this off, he founded a new company called Worldwide Technology. Just 4 years later, the company entered a partnership with Cisco Systems. Many saw this as a fluke, believing there was no way other leading tech companies would partner with a Black-owned company. But after the partnership with Cisco, Dell called, and barely a few months later, Microsoft approached. By 2003, the combined revenues crossed $1 billion, then $10 billion, and then $14 billion. Today, official records from the company show annual revenues of over $20 billion and employing approximately 12,000 people worldwide. This makes it the largest Black-owned company in the United States by a long margin. The company is one of the biggest private investors in AI, putting in over $500 million as of the making of this video. It is also building specialized AI labs inside its Advanced Technology Center, where organizations can test and develop custom AI solutions before committing their own resources to reduce risk. The biggest banks, the biggest government agencies, and the biggest tech companies in the world all come to his group to figure out how to build the future through his consultancy and automated services. Forbes estimated Steward's net worth at $11.4 billion, making him the wealthiest Black person in America. That number puts him above every Black athlete, entertainer, and executive in the country. The crazy part is that he got there without a single dollar of venture capital, without a famous last name, and without anyone handing him an opportunity he did not go and create himself. His company WWT has appeared on Fortune's 100 Best Companies to Work for list every year from 2012 to 2025, bringing the current total to 13 consecutive years. He has donated over $100 million to churches and faith-based charities and also earned the Horatio Alger Award for the Best Self-Made Icon. And just like that, the man who grew up emptying chamber pots before school built a company that the whole world wants to work for. David Stewart started with an empty bucket and $2,000. He believed it was never supposed to be empty, and now, 40 years later, he fills that bucket with $20 billion a year. Now tell us what you think. Would you trust any of these people with your money? Is there someone else that better fits the position of number one? Which of these people do you think would be remembered most by future generations? Let us know in the comments down below. If you enjoyed the video, please make sure you like, share, and subscribe. Now click on the next video shown on your screen. You will enjoy it.